Welcome, my dear students, in our course International Banks, and today we will explain chapter number 4, Developments of International Banking. So, the first point or the first section, GATS and International Banking. So, why we study GATS and what do we mean by GATS? GATS as International Agreement, and this abbreviation stands for General Agreement on Trade in Services. So, this agreement regulates the international trade on services. This agreement or GATS, a new multilateral agreement and entered into force in the beginning of 1995 as a result of Uruguay Round. Uruguay Round, in this case, we talk about negotiation process between countries in case of GATT. So there is a difference between GATT and GATS. GATS, G-A-T-S, this is General Agreement Trade on Services, but GATT, G-A-T-T, General Agreement Tariffs and Trade. So this is different between GATT and GATS. The main question now, it's clear that how you can import or export a product or a commodity. Yes, you can export or trade in commodity when you transfer the product or goods from the port in exporter country to the port in importer country. So for service, how we can import or export a service. This is very important. How we can import or export a service. GATS answer this question by the following 4 modes of supply. 4 modes of supply. In each mode, we compare between, first we have 2 parts, provider of a service equal producer, equal exporter, equal seller, and the user for this service, user equal consumer, equal client, equal importer. In each case, we compare between 2 cases, immobile and mobile. Immobile equal the provider or the user is still in his place or in his country. Mobile equal the provider or the user move to another place. So the first mode number 1. Mode number 1 equal cross-border supply. Mode number 1, cross-border supply. So in this case, cross-border supply, the case when provider of a service immobile, still in his place, and the user for the same service immobile, the same. So this is cross-border supply. So my question now, the provider in his country, the consumer or user in his country, how we can export or import a service by technology. By technology. Give me example related to banking. Suppose you are Egyptian resident and live in Egypt. You access to the website of Bank of America to make a deposit, to open a bank account, anyway. So in this case, we talk about cross-border supply or mode number 1. Mode number 2, the case when provider of a service immobile, but the user for this service mobile or move. So we can call this mode as consumption abroad. Consumption abroad. This is mode number 2. Okay? Consumption abroad. Okay. Consumption abroad, the user travel or move to consume this service. Give me example related to banking. Okay? When you are Egyptian and live in Egypt, you will travel to USA to request a loan or make a deposit in Bank of America. In this case, you travel. Mode number three, the case when provider of a service mobile but the user immobile. So in this case, the producer move to provide a service. Mode number three, we talk about commercial presence. So give me example related to banking when suppose Bank of America open new branch or subsidiary in Egypt. This is mode number three. In general, mode number three related to FDI or foreign direct investment. Another important point that mode number one, mode number two, mode number three, we talk about the provider of a service as a firm or corporation. But mode number four, the case of the provider mobile and the user mobile. In this case, we talk about the provider of a service as an individual or natural person. So mode number four, temporary movement of natural persons. In this case, we talk about the provider of a service as an individual, natural persons. Give me example related to banking. When we talk about, suppose you are accountant or consultant and you will travel abroad to provide a consultant or any service. In this case, talk about mode number four. In general, which mode of supply subject to the highest restriction? The highest restrictions in case of mode number four. The lowest restrictions, mode number one. So we can answer the question where how we can import or export a service. Another point when we talk about the classification of services in GATS. In general, GATS, we talk about sectors. How many sectors? 12 sectors in case of GATS. So GATS classified services into 12 main sectors or general sectors. For example, when we talk about education in this case talk about sector, tourism sector, financial services sector, commercial services sector, and so on. Another classification when we talk about subsectors, or actually the services or the individual services. So when we talk about education, in this case we talk about the main sector. Subsectors may be primary education, higher education, adult education, and so on. For banking is a subsector. Banking service as a subsector. So the main sector, financial services. So GATS classified banking services into the traditional classifications for banking, like acceptance of deposits, lending, leasing, all payment guarantees, and on account for or accounts for customers, or in exchange of accounts, like the money market, foreign exchange, derivatives, securities. So in this case, talk about the classification of banking services as a subsector in case of GATS. This case study, when we talk about the importance of services, so based on the value add terms, maybe services account for 50% of trade or of world trade. Another importance that based on technology and advances, in this case we talk about the services may lead to achieve sustainable development goals like environmental services and so on. The next, definition of international banking. In this section, we will present many terms or many definitions related to international banking, but first we need to focus on that international banking, the process related to imports and exports and operating trade finance and international currency and international clients. All in all included as international banking business. So what about the characteristics that distinguish the international banks from domestic? In this case, we talk about the type of loans or deposits and the investments. So all we talk about the international level. What about activities for international banking? We can classify activities provided by international banks into two main categories. Number one, traditional. Traditional foreign banks, in this case, any transactions with non-resident in national currency. In this case, talk about traditional form of international banking. Euro currency banking, in this case, we talk about the wholesale foreign exchange transactions with resident and non-resident. Another term, in this case, when we talk about international banking versus multinational banking. International banking versus multinational banking. In general, multinational banking related to FDI, foreign direct investment. And in this case, talk about the ownership percent and what about the establishment process and the operation and the foreign branches, subsidiaries. All in all, we talk about multinational banking. So it's very important when we talk about the ownership and what about the control and management of operation in case of multinational banking. But the international bank model, in this case, talk about banks operate out of the home market in other country or other financial center to conduct the cross-border business. Cross-border business. So multinational, if the bank classified as a multinational, this bank provide banking services in domestic market plus foreign market. International bank model, when the bank provides services abroad only, not in domestic market. Another distinguish between two terminologies when we talk about the global banks and international banks. Okay, global banks, we can classify any bank as a global when provide banking services in many countries in all continents. In all continents. And this is talk about global bank. Like this bank provides services in Africa, in Asia, in America, in all continents in the world. But international banks, when the bank provides services in some countries and some continents, not all. Some countries and some continents. So we can classify bank as international if it has branches or subsidiaries overseas, and we will discover the differences between branches and subsidiaries, and conduct business in international currency or foreign currency, and when we talk about international clients. But domestic bank, no, we talk about the providing of banking services only on the mother country or the headquarter. This case study, when we talk about Industrial and Commercial Bank of China, as we presented in the last chapters, this bank classified as top 1 or ranked as number 1 based on Tier 1 capital. So this bank will talk about market capitalization with $250.4 billion, and in this case talk about large bank in the world. The history of international banks. Mainly we talk about some points of view that argue that we talk about 400 years, over 400 years. This is the first or the origin of international banking. Another views, we talk about the history started with the century number 15, when we talk about the Meiji family, and we talk about subsidiaries and foreign branches in other areas to facilitate trade and scientific and military and products. But in general, we can classify the history of international banking into two main waves. Two main waves. Wave number one, the colonial banking. Colonial banking first, the colonial equal strong relationship between large country, this is we can classify it as a mother country, and small countries. Strong relationship related to import, export, markets, and in this case talk about political and economic dominance between the large country and small countries. In this wave, or the first wave, we talk about the bridge banks. The bridge banks, this is the leader model in this case, with other Europe model like Belgium, France, and Germany. So in this case, talk about two different models started during the 19th century. Actually, when we talk about 1830. So what about bridge banks model or Anglo foreign banks model? In this case, we talk about this model adapt the international banking model. So the bridge banks provide services out of UK based on subsidiaries or branches. But Europe banks, in this case, other Europe banks like Belgium, like France, like Germany, adapted or implement the multinational model. So provide banking services in domestic market and foreign market. The second wave, modern international banking. This is the second wave in international banking. So in this case, we talk about this wave. We talk about decline in the banking on the bridge banking model, okay, and we talk about critical time in the history, like we talk about World War I, World War II. We talk about Great Recession, and we talk about high risk. We talk about uncertainty. We talk about nationalization. Nationalization convert the ownership from foreign to national. So talk about critical time in the history of the world. What about the beginning? In this case, we talk about the first stage in wave number two. In the first stage in wave number two started from 1950. In this case, talk about the expanded for US banks or enlargement and or expansion of US banks. In this case, talk about the US banks suffered from problems in domestic market. Actually, when we talk about Regulation Q equal limits and restrictions by federal bank in the banks provided or provide services in the US, like heavy reserve requirements, like limitation on the interest rate. So the US banks try to establish subsidiaries and branches out of USA, mainly in London. So in this case, we talk about, based on Regulation Q, the US bank expansion abroad and provide the banking service, and this is the birth of euro dollar. This action or this event, the birth of euro dollar, equal the American dollars invested abroad or out of USA. So this is the first stage in wave number two. The second stage, we talk about the time from 1970s to the 1980s. In this case, we talk about expansion for Japanese banks. And in this case, talk about the growth of Japanese multinational corporates. But started from 1990s, in this case, talk about decline in Japanese banks and come back for Europe banks. Come back for Europe banks. The next section, forms of international banking. This is the first form as correspondent banking. Correspondent banking, this is the first form, and some data when we talk about the volume and value increased by 2% and 7%. So when we talk about correspondent banking, this is the lowest level of international banking. This is the lowest level of international banking. So a correspondent bank is a foreign bank that offers banking services on behalf of another bank located in other countries. So in this case, to understand the correspondent bank, we need examples. Suppose you will export, you are Egyptian exporter and you export products with $1 million to American client or American importer. In this case, we talk about this transaction between exporter or Egyptian exporter and American importer. You as Egyptian exporter, there is no account for you as Egyptian exporter in the US market, and the same, there is no bank account for the American client in Egyptian market. So how we can transfer the $1 million? Step number one, the American importer contact his bank in USA. Suppose this bank, Bank of America, contact his bank in USA about the details for beneficiary. Beneficiary in this case talk about the Egyptian exporter. The beneficiary in this case, the Egyptian exporter. Contact about details like bank account, bank name, and so on. So in this case, we talk about the American bank or Bank of America as respondent bank. But this case, this is step number one, the American client contact the respondent bank, Bank of America, okay, about the transaction. Step number two, the American bank contact its correspondent banking in Egypt, say Bank Misr. So Bank Misr in this case, correspondent bank, okay? So the correspondent banking started with respondent and then correspondent bank. So the first transaction, we talk about transfer of $1 million. Okay, the correspondent bank debt the importer client with $1 million and open account. This account called Nostro account. Okay, this Nostro account but debt by $1 million. The transfer of $1 million from the American bank to Bank Misr, in this case, talk about Vostro account. Nostro and Vostro, Latin words or Latin terminologies. So Nostro equal ours and the Vostro equal yours. In English language, in this case, we can use the translation. So correspondent banking started with Nostro and maybe ended with Vostro. Suppose the Egyptian exporters no account in Bank Misr but Bank Al Ahli. So in this case we need step number 3, transfer of $1 million from Bank Misr to Bank Al Ahli. In this case talk about Loro account. So question now, why Bank of America not contact Bank Al Ahli directly? Because Bank of America deal with Bank Misr as the correspondent bank, the agent, or deal with the Bank Misr as the correspondent bank. So in this case we can summarize the Nostro and Vostro account held in foreign currency, opened by banks only, relationship between banks, and use settlement of foreign transaction. In this case we talk about fees or commission to provide this service. This is example when we talk about importer with a bank account in USA want to pay exporter in Japan and no bank account in USA. In this case, The first, importers authorized a deposit to exporters in Japan by notifying his bank the banking details for exporter or beneficiary. Second, the importer's U.S. bank debts the exporter's account, then contacts its correspondent bank in Japan and authorize them to credit the exporter's bank account. Third, the bank in Japan provide the details and credit exporters. So in this case, we talk about the lowest level of access to international market or international banking. Example for this case, when we talk about Canadian Imperial Bank of Commerce, and this is the largest bank in Canada. And this is video to explain what the difference between Nostro, Vostro, and Loro account. The second form, when we talk about representative office. In this case, the bank create or set up a small office abroad to discover the market or new opportunities, but not providing any banking service. This is very important. Representative office not providing any banking services equal no loans, no deposits, but only make a marketing studies, make feasibility studies, surveys, any discovering for new opportunities. So mainly it's small office with the lowest number of staff or workers. This is a case study for representative office. Bank Misr actually launches representative office in Russia. So in this case, this representative office for Bank Misr not providing banking services, but only make visibility study, marketing study, and so on. Agency, in this case, this is form number 3. So this is maybe separated incorporated branch of international banks in each country. So in this case, integral part of the parent bank. So agencies in this case provide specific services. So agency banking is a form of branchless banking. So the bank make a contact with any corporate or financial corporate to provide specific services like credit card services and so on. What about the limitation for this agency? This is vary from country to another. Maybe some countries require strong relationship between the bank and this agency, and another make the restrictions. The popular case for agents when we talk about the money wallet and the money wallet and the mobile money applications. Okay, so in this case, talk about the steps for agency banking in this category. Contact or authorization related to the contact details, username, passwords, and other information. Establish the money wallet. In this case, we talk about the transfer of money and open accounts and cash in and cash out. Branch office and the branch subsidiary. We will explain two forms together: branch office and branch subsidiary. Branch office and subsidiary. In this case, when we talk about the branch, in this case, we talk about branch and subsidiary. We talk about place, we talk about building, but different in size. So a branch lower than subsidiary, lower than in size, lower than in staff and anything. Okay. Another important point that branch is still part of the mother bank. Implement policies, implement decisions, all internal process, the source mother bank. So in this case, branch is still subject to the mother bank policy and internal process. But subsidiary, no. Subsidiary, there is separated entity, legal entity between the subsidiary and the mother bank. So we can summarize the merits and demerits, or advantage and disadvantage, for each form of banking. For example, correspondent banking, in this case, talk about lowest cost, okay, and lowest banking services. Lowest cost as merit or advantage, and lowest banking service as demerits. What about the high cost? High cost in case of subsidiary, okay. In this case, talk about high cost. So this table comparison between each form of international banking. The next section, competition in international banks. Competition in international banks. Competition in general, we talk about essential factor in economy and encourage business to enhance and to provide efficiency. So improve access to finance, enhance competition or competitiveness, and promote innovation, stimulate economic growth. All we talk about the advantage for competition. What about the level of competition? The highest level of competition, perfect competition. The next, monopolistic competition. The next, oligopoly competition, and duopoly. Duopoly competition, we talk about only two producers or two providers. And the pure monopoly, when we talk about only one provider for this service or this product. Okay, so monopoly, market with only one provider. Monopolistic competition, market with providers can enter freely, and this is the difference between any market. Oligopoly market, few providers. Duopoly, only two providers. And perfect competition, many providers for the competition. The question now, how we can determine the degree of competition? We will use HHI index, Hervandel-Hirschman index. This is a degree of competition, and in this case talk about the degree of market power. Degree of market power. This is the rule. What about the range? The range for HHI near the 0 to 10,000, near 0 to 10,000 of points. This is the parameter for HHI, okay. PC equal perfect competition. When we talk about 1, HHI equal 1. This is the extreme cases. So two extreme cases. Case number 1, perfect competition PC when HHI 1, and perfect or pure monopoly when HHI equal 10,000. This is the extreme case number 2. CM, competitive market, when HHI greater than 1 and lower than 1,500. MC equal monopolistic competition. Okay, so monopolistic competition when HHI equal 1,500 to less than 2,500. OM, oligopoly market, when the HHI greater than 2,500 but lower than 5,000. Duopoly market, when HHI 5,000 or more but lower than 10,000. When actually one provider or one producer, this is pure monopoly, HHI equal 10,000. In advanced countries or developed countries like USA, use this parameter to decide we will accept the merger or acquisition process or not, to protect the consumers. So we will talk about the next problem. Okay, suppose bank A, bank B, bank C, D, E, and the bank number of VIB clients. So this number equal 12,000. This number equal 12,000. Okay, so top largest or the largest 5 banks in the world in this country, you talk about bank A, bank B, bank C, and bank D, and bank E. What about total market? Total market, not the summation of all banks. not summation of 5 banks, but summation in all banks in this country equal 150,000. So how we can calculate this HHI? Number one, we talk about the same modification. Bank E, number of client 12,000. Okay, so first we need to calculate the market share without percent. So market share, the value for bank A equal 42,000 divided total market 150,000. In this case equal 28%. We will write 28 only. The same for bank B, 30,000 divided 150 equal 20%. We will write 20. And the same for bank C, 24,000 divided 150 equals 16%. We will write 16. And bank D we will write 12, and bank E we will write 8. Column number 3 or column number 4, we will calculate the market share square. Market share square. Okay, so 28 square equal 784. 20 square equal 400. 16 square equal. So summation of market share square, this is HHI. HHI in this case, summation of market share square. Summation. So 784 plus 400 plus 256 plus 144 plus 64, we talk about summation of market share. The value equal 1648. Save as this value 1648. We will go to our parameter 1648. So we talk about this HHI, okay, 1648. So this market monopolistic competition or MC. Monopolistic competition or MC. So we can search for how we can compete in monopolistic competition. If our market OM, we will search how we can compete on oligopoly market and so on. This is the importance for HHI. This is a table or video for our lecture and case study money laundering. Case study for this chapter, money laundering in general, we talk about multiple definitions. So it's a process by which the proceeds of the crime and the true ownership. In this case, talk about money laundering, the process of hide the existence and illegal source for money. And we can define money laundering by our words that transfer the dirty money to clean money, transfer the illegal money to legal money, transfer the unknown source for money to known source for money. Okay, what about the estimation for money laundering? IMF expected or estimated the value of money laundering annually from 3 to 5 trillion of dollars per year. This is very important and critical value for money laundering. So in this case, talk about some details, 3 poles or categories of hiding this money laundering. Number 1, use of financial institutions like banks, and so we will study this concept. Physical smuggling bulk cash from country to another, and transfer of goods with global trade. The process, number 1, placement phase. In this case, talk about this is the first stage. In this case, talk about proceeds illegal or proceeds of or draft the money from illegal activities. In this case, talk about currencies. In this case, talk about or millions of dollars or any currency from this placement. Layering phase in this case talk about separations of proceeds from illegal source through the use of complex transactions. The source from phase 1, we will create or generate more activities with the complex actions or transactions to hide this process. Integration in this case talk about conversion of legal proceeds to the legal business. Okay. What about the techniques? Maybe cryptocurrencies, maybe deposits, maybe connected accounts, maybe payables, maybe forex, okay, maybe credit cards or debt cards, insurance. All we talk about techniques used in money laundering. Impacts of money laundering may be harmful for macroeconomic, and IMF make a problem for any country participate in this money laundering. In all, we talk about the risk, maybe reputational risk and legal risk and operation risk. In this case, any bank or any country participate in this process. Characteristics of this money laundering may be drug producing regions, transshipment for drugs. Only we talk about illegal issues like drugs and any illegal activities. If the bank participate or join this money laundering, we talk about penalties. For example, this bank in the year 2006 took about penalties with $80 million. How this money laundering discovered? By the auditing process. Audit process, in this case, took about reports. Maybe this bank participate in the money laundering. So, when we talk about this service, wire transfer between international accounts, electronic banking services, private banking relationship, and correspondent banking. This is very important principle used to fight the money laundering. KYC, know your customer. Know your customer. If you want to make a deposit or transfer any value or any money from your account to other account, the bank required or apply the principle KYC. So know, in this case, the bank should know the true identity and beneficial ownership of the account. And what about the permanent address and the registered and the administrative address? All available in the receipt in the bank. Yours equal refers to the branch managers will audit officers to monitor the officials. So in this case, talk about the internal process. Customer, one who maintain the account. In this case, talk about business relationship or whose behalf account is maintained or the beneficiary of the account. So KYC, very important to fight the money laundering and they help to protect the reputation for banks. Thank you, my dear students, for this chapter and see you in the next chapter.